Hello traders and welcome to Forex Price Action. Today we'll be looking at the USD Swiss chart. I'll be taking you through the price action analysis, looking at how price has moved over the past year. So let's deep dive. What you're looking at is the daily chart. This is a price action over the past year. As you can see, actually around year to date, from starting year to date. And you can see price has been on an uptrend, a nice uptrend. I love the slope of the uptrend. I've said before that I prefer trends that are sloping in a 45-degree angle. If you look at how this trend is sloping, it's 45 degrees from the left of your chart to the right of your chart. These usually form some of the most sustainable trends in the market. And I would like to take you through how this uptrend actually started. My next higher time frame is usually the weekly. We had a level around roughly around 86, around 85.50. It's a key level, key swing point, KSP. As you can see, it led to this up move. Then we saw a reaction around the 9100 level that saw another down move. And I want you to look at price behavior around this particular level. Let me zoom in. So we saw heavy movement to the downside. This order flow is heavily bearish. We saw it clear this level. It did not even spend a minute around that level. It cleared the level. These are breakouts that you need to be wary of. You ideally don't want to be caught taking shots in such breakouts, and I want you to look at how price reacted afterwards. We did see an immediate retracement to the level, but we did not see a continuation of the sell move. This is the first signal that this downtrend might not ideally continue. What we saw was two consecutive bull bars, but these two bars were not reason enough to actually go long because they're completely engulfed by these sell bar. As you can see, this is an inside, what you call an inside bar pattern, where you have one bar completely engulfing other bars. So this is the mother bar, these are the inside bars. But I want you to look at the third weekly candle. What do you see? It closed above a clearly defined level, showing that this movement down here was actually a false break. Why was it a false break? This level failed to hold as a resistance, despite the prior action being a breakout. Ideally, when you see such price action, especially on a higher time frame chart like the weekly, you expect price to actually retrace to the broken level, and you expect it to hold as new support. And ideally, such breakouts usually lead to sustained uptrends in the market. That is exactly what has been happening with the USD Swiss since we saw this false break event around January. And since then, if you're taking your trade just based off the weekly time frame alone and had a stop loss just below the breakout bar, assuming you're risking 1% and you're targeting some of these highs around 9100, you will have made a 5.5 return, 5.5% return, depending on the risk on your R. If you risk 2% per trade, like if I was trading this solely off the weekly, I would have risked something like 2 or 3%, given it's the weekly price action, meaning I can fully trust it. So I'll aim for the jugular in this one. So assuming I had risked 3%, one trade alone will have made you 15% in 4 months. There are traders who never see that in a year's performance. Yeah. And they are in this price action actually gave you more opportunity to actually scale, basically pyramid into this trade when it's taking out these highs, taking out such levels. If you go to the lower time frame, you do ideally see those opportunities pan out. Back to the daily, price is fractal. What we saw on the weekly is basically what you also see on the daily. Fractal meaning patterns of self-similarity. We saw, remember, a weekly bar is just 5 daily candles. So this is just a micro scale. It's just when you scale into that particular price action on the weekly, and you can see the trade on the daily. The daily will have given you a nice R, it will have given you a nice top. Sometimes I like using line charts just to see which is the last low prior the breakout and put my stop there. Really helps. Assuming I had the same target around 91, my R has actually improved significantly to 6.1. So that's how you use the lower time frames when you zoom in by moving to a lower time frame for your entries, and you can see how price action actually panned out over the 1 year. Price has been steadily going up, clearing levels, going up, but it has hit resistance, and resistance is coming in around the 9100 region. Remember, support resistance is a zone, not necessarily a fixed price. And as you can see, for me, I've marked my resistance around the 9100. It's a big figure. So clearly the entire market will be looking at that level. And you can see the price action at the 9100. What actually happened? False break event. Are we seeing a false break event? False break event. We actually headed to the 9100. If I was to go to the weekly and adjust sorry, let me go back to the daily. If I was zoom out, sometimes it's important to zoom out just to look at how the bigger picture looks like. When you zoom out and you adjust when I adjust that level, the resistance level, see it comes in around the 9100, but it seems to be a deeper zone around 9100 to 9140. So that's a region I'll be looking out for coming this week. And to the beginners, a trick you can use when you're drawing your support and resistance lines, there's something I use called BCW. The B stands for bodies, the C stands for congestion, and the W stands for wicks. So I give priority in that order respectively. So ideally look for the bodies and put my line where the bodies are, majority of the bodies are cutting. Then I look for where there are congestion areas, and finally the wicks, especially when I'm doing resistance and support areas from the higher time frame perspective. Given this false break scenario, I have placed an entry around the breakout level because I'm expecting to see price retrace around the 9100. As you can see, this is how the trade looks like. My stop loss is 1 ATR above the 9100 region. The ATR was 66 when I was placing the trade, so that's why my stop loss is around 9166, and my first take profit is around, you see where we are seeing these weak rejections, slightly around there. I've marked it to the green dotted line. Let me make that a bit thick. There, that's where my first take profit is, and my first take profit is usually at 1:1. I risk 2% of my capital. Then the other trade, I'll let it run to my next take profit, and my next take profit is usually a key area that has been identified in the chart. As you can see, this area was broken and we had to see a retest of that level, so that's where I'm targeting, and it comes in around the 88.92. Put it around 8900. That's where my take profit 2 is, my TP2. So usually, just as a recap, I usually take 2 trades. I'll split my R into 2. I risk 2%, so those are 2 trades. The first trade I'll target 1:1, and the other trade I usually target a key area observed on the next higher time frame chart. So that, ladies and gentlemen, is a recap of the price action that I'm seeing on the USD Swiss. Do comment below on what you think, and let's see how this pans out. Thank you, and look forward to the next video.